Thank you, Sam, and welcome to all of you out there. And I hope you enjoy talking about overdrafts as much as I do. This is one of a series of programs that I've done that have attempted to stay on top of what the most recent developments have been with respect to overdraft practices among financial institutions and to help keep people abreast of what the environment is for overdrafts and overdraft processing. Today, we're going to spend virtually no time talking about the first item on your screen right now, how we got to this place. You'll see on page 1 and continuing over to page 2 of your handout that there is a long bullet list of events that start back, well, about 13 years ago now, when the OCC first raised the issue of overdraft management as a concern. I'm not going to go into all of these bullet items. It's there for your reference purposes, and those of you who have been in the industry for a while will recognize a lot of those events. What we want to instead is focus on the environment that we face today. Now, that means that for many banks, those of you who are FDIC supervised in particular, we're going to be taking a look at the FDIC guidance and the FAQ that was issued back in 2010 and in 2011, respectively. We'll also get around to talking about some events that have happened since then, and we'll wrap up toward the end of our presentation with some discussion about what's going on with the Consumer Financial Protection Bureau and its interest in overdrafts and overdraft fees. We'll talk a little bit about some consumer suits, that is, suits brought by consumers against some of the big banks with respect to overdrafts. We'll talk about some enforcement actions, primarily from the perspective of trying to help you avoid the problems that other banks have already run into and had to pay for. And that's basically what we're going to do over the next couple of hours. As Sam indicated, we're going to have a question and answer period about halfway through, along with a break, and that will take us to that'll fill out our 2-hour period. In any event, I'd like to invite you to flip over to let's see, page. Actually, I want to just call your attention to the fact that one of the items that was available for download for you was a separate PDF file that I refer to as the appendices to the materials, and these are some source materials that may be helpful to you in understanding the concerns about overdrafts and how the regulators are looking at them. The first in that bunch is the November 2010 guidance from the FDIC, followed immediately by the April 1st FAQ that the FDIC put out in order to explain its guidance, and then it jumps back to the 2005 overdraft guidance that was issued by on an interagency basis by the FDIC, OCC, Fed, and National Credit Union Administration. And then a couple of interesting, well, if you're into bedtime reading, I suppose, interesting documents that the FDIC has referred to a couple of times with respect to its overdraft management programs, and then also a link to an overdraft program risk assessment template, which is something that is available in Banker Tools at Bankers Online. We'll talk about that briefly. And finally, there's a memo that was issued by the FDIC's Kansas City office very recently, as a matter of fact, in March of this year, which will impact, again, FDIC banks. Okay. Why are we concerned? Well, also in your handout on page 2, there's a graph which you see here on your screen, which is lifted from the Wall Street Journal of, let's see, this particular one is from April 1st. The there was a study done of 3,000 financial institutions, and it's just interesting to note that the high point as far as overdraft revenue of the industry was back in 2009 when the industry pulled in roughly $37 billion in overdraft revenue, they call it here, overdraft fees. And that has slipped off to currently almost $32 billion. So there's about a $5 billion drop over the, let's see, that was through 2013, so that's over 4 years. The median overdraft fee, which is the, if you take the fee that each bank assesses its customers for an overdraft and you arrange them in order and you pick the middle of the list, that's the median. Back in 2009, that number was somewhere around $26, and in 2013, at the end of the year, the number was $30. So that the fee amount is continually increasing. It flattened out from 2011 to 12, but it's back up again. And from what I can see, those fees continue going up this year. By way of background, I want to just point out on the bottom of page 3 a little discussion about the word guidance. What I'd like you to do is consider guidance as a statement from someone who says, if you know what's good for you, this is what you'll do. That's what the FDIC has done with its guidance. That's what the interagency guidance is being considered with respect to particularly FDIC supervised financial institutions. It's not one of those guidance from a doting parent who might say, look, I told you what I think is right. Now go do what you want. That's not the kind of guidance that we're talking about here. This is when a regulator says guidance, it's about as close to a regulation as you can get without being a regulation, I guess. And particularly since the guidance that comes from the FDIC and other agencies typically revolves around issues of safety and soundness, there's not much you can do about ignoring guidance without incurring the wrath of the regulator, primarily because they can point to a failure to observe the guidance as a failure of safety and soundness, and they can write you up on that, even if it's not a violation of law or regulation. Over on page 4 of your handout is just a little discussion of the FAQ that was issued back in April of 2011, and the FAQ I find to be very handy in as much as it kind of it illustrates what they meant in the guidance. It's what the guidance should have said if it had been written by someone who had some banking experience. That is, if they knew the questions that the banks wanted the answers to, they would have put all of this stuff in the guidance back in November of 2010 instead of waiting until April of 2011 to get the information out. And then finally, I just want to point out on page 5, there's a discussion of the 2008 study report, and that's one of the appendix documents. There's an executive summary that's available. That 2008 study is an interesting thing for you to use if you want to use it as a template for providing information about your own overdraft practices for board member familiarization, for instance. You know, one of the big themes from the FDIC in its guidance is that the board of directors of a financial institution needs to manage the bank's overdraft program, and that is they need to understand it. They need to be able to set the direction for it. And they may not get into the nitty-gritty, but they certainly need to be able to set the tone for the guide for the overdraft program and understand key aspects of it. So the 2008 study has a lot of interesting questions in it that you can answer, not for the industry as a whole, but for your own financial institution, so that you can help convey a good, accurate description of your program to your directors.